The news has spread like wildfire, shaking the very foundation of the global financial markets. The grand acquisition of Credit Suisse by UBS has sent shockwaves throughout the world, causing a significant stir amongst investors and experts alike. What was the reaction of UBS CEO to save, and is it enough or the damage is done? Alas, the initial response was bleak and full of despair, as major indices across Europe and Asia plunged into the depths of darkness, with the shadows of losses looming over the horizon. Credit Suisse and UBS, both pillars of the financial world, were struck hard, their stocks plummeting by more than 60% and over 12%, respectively. The reverberations of this event have reached far and wide, even affecting German banks with their ties to Swiss banks. As if that were not enough, rising interest rates and inflation-combative measures have added fuel to the fire of caution towards the banking sector. A dark cloud hangs over the financial markets, casting a somber light on the future. It's Monday morning and the markets are digesting the news that UBS is set to acquire rival Swiss bank Credit Suisse for $3.25 billion. The FTSE 100 lost 1.7% to open at 7,257, while the CAC 40 in Paris fell 1.05% to 6,826 points. In Germany, the DAX fell 0.36% to 14,714. The acquisition is the key focus for markets today, but it's done little to allay the market's unease, with banks nursing painful losses across Europe. Credit Suisse opened down by more than 60% and UBS down by over 12%. German banks are understood to have direct financial exposure of at least $11.5 billion to Swiss banks. While the investors remain extremely cautious towards the sector due to the backdrop of inflation-combative rising interest rates after the long-standing punchbowl of cheap money was removed. This is having major negative reverberations across the sector and wider markets globally. Yet, amidst this chaos, a beacon of hope shines through, as the CEO of UBS Ralph Hammers expresses unwavering confidence in the acquisition's financial benefits for their shareholders. Following the takeover announcement on Sunday, the U.S. Federal Reserve and several other major central banks announced a coordinated effort to boost the flow of U.S. dollars through the global financial system to help keep credit moving. In early Asia trade, Tokyo's Nikkei 225 fell 1.42% to 26,945 points, while the Hang Seng in Hong Kong lost 3.18% to 18,897. In mainland China, the Shanghai Composite also lost ground, falling 0.48% to 3,234 points. U.S. stocks closed lower on Friday as banks remained under pressure after a consortium of 11 big U.S. banks banded together to deposit $30 billion into First Republic in a bid to stabilize the banking system. The world remains on edge, and investors keep a watchful eye on this situation, anticipating the next chapter in this unfolding drama. For now, the global financial markets remain volatile, their fate hanging precariously in the balance. The news of UBS's acquisition of Credit Suisse has caused a significant stir in the global financial markets. The immediate reaction was negative, with major indices across Europe and Asia experiencing losses. Credit Suisse and UBS were hit particularly hard, with their stocks dropping by more than 60% and over 12%, respectively, with an impact on the banking sector.